way I've described it is that, the same technology that allows for peer-to-peer money has allowed for peer-to-peer scams. And there are tools like Bitcoin and stable coins and things like that that are useful. And then there's this whole offshore casino, regulatory arbitrage thing that's happening on the side, and essentially saying that whatever's going on there, that's a different industry. That's a very different thing, and that this is now not really something that has almost anything to do with Bitcoin. And a lot of times, even those companies will rarely talk about Bitcoin. I mean, sometimes things just bleed out over years, and I think there's a lot more of that still has to happen in the industry. And a lot of people are worried about what would happen to, say, Bitcoin if you had a recession next year. And obviously, that's somewhat uncertain. We don't know for sure, but I think a lot of that's going to be driven by earnings. So when Satoshi published this white paper, he had a clear goal in mind based on all the writings he did, which is essentially that the world has a payments and a savings problem, right? So currencies can be diluted. There's 180 currencies in the world. I think it's something like 130 of them are like free floating. They all have these little local monopolies. Most of them are not saleable outside of their jurisdiction. Only a handful are, like the dollar and a few others. Most of them degrade extremely quickly in terms of purchasing power, sometimes with these huge stepwise devaluations like hyperinflation or nearly so. And so if you're just born into a jurisdiction that for whatever reason has a bad money, it's very hard to save. So that's number one. And then number two, there's all sorts of financial censorship. As is more and more technology developed, it's easier for authoritarian governments to censor payments and to infringe on privacy and to control things. I actually tweeted out two things recently. One is that Nigeria is limiting how much cash you can withdraw from ATMs significantly in order to push digital payments. And two, there was a story about Iran potentially freezing bank accounts of women that don't wear a head covering, right? And so these are examples. And obviously, China has been a long-term example of linking a social credit score to payments, where if you're on the wrong side of the CCP, you might not be able to get a train ticket, for example. You're just cut off from all sorts of services. And Satoshi was ahead of it, and he provided a technology that can solve this. And I think the innovation is he took proof of work, combined it with difficulty adjustments, and purposely kept the node small and simple so that people can run it. And naturally things develop in ways you didn't expect. I mean, I don't know if he expected miners to break away from nodes. There's obviously iterations that happen over time because it's not led by Satoshi anymore. But essentially, the network is fundamentally the way it looked when it was launched, which is about as decentralized as you can get, and it purposely makes a lot of sacrifices in order to maintain that decentralization. And like any other financial system, you can build up in layers. You can add side chains, you can add channel-based things, you can add some custodians on top of it. There's all sorts of ways to build up a stack and increase throughput or increase code expressivity, all sorts of things so that people can kind of choose what layer the network works for them and their goals and their resources. And I think that's the real innovation. And I think, the vast majority of what happens elsewhere is distraction, malinvestment, consumerism, basically fiat in a digital form. So, and I made some exceptions. I mean, I think stable coins are obviously serving a utility purpose in many parts of the world where they need dollars but have trouble accessing dollars. So I've been open to that. I think there's opportunities for tokenizing things. The way I've described it is that the same technology that allows for peer-to-peer money has allowed for peer-to-peer scams, right? So you can transfer value between each other, but it also has allowed scammers, and they're not unique to this industry. I mean, there's scammers throughout history, but this is just a new medium, a new tech rails where people can create something, market it to the public, hype it up, and then get out of their position without ever actually having built something sustainable, something enduring. And that's just a recurring thing that happens cycle after cycle. And so I think it's natural to see a divergence in the space and for people to say, I'm focusing on utility. I want to solve real world problems around the world, especially problems outside of the developed world, but really the whole world. And there are tools like Bitcoin and stable coins and things like that that are useful. And then there's this whole offshore casino, regulatory arbitrage thing that's happening on the side, and essentially saying that whatever's going on there, that's a different industry. That's a very different thing, and that this is now not really something that has almost anything to do with Bitcoin. And a lot of times, even those companies will rarely talk about Bitcoin. I mean, I think what was the stat? Like Coinbase went like months and months and months without mentioning the word Bitcoin in a tweet.
Mm-hmm.
A lot of their executives have .eth in their Twitter handles. basically the industry has forked. The crypto industry kind of is about short time preference and kind of just getting to the profit part before they built something, and dumping that on retail in a way that is without proper disclosures, just kind of getting it out there and then profiting from it, going on to the next hype cycle. Well, what you built is just not actually a business. It's not actually something sustainable. It doesn't stick around for more than one cycle. And I think that's the problem to focus on. It's not the technology itself. It's just the financial misincentives that happen throughout the whole space. I think that anything you can do for the network is good. I mean, I think especially the points where Bitcoin is currently not the strongest, like privacy fungibility. I think any work there is very good for the network. I think educating and separating the difference between Bitcoin and a lot of these coins that can just be created out of thin air is very important. So I think anything that you can do to have the media not lump those together is important. I think having people understand how Bitcoin uses energy and how much it uses
Yes.
relative to total energy produced, how it specifically, just financially seeks out wasted energy as a matter of, just just economics. I think all of those are very helpful. I prefer not to think of anything as inevitable because I think that can lead to complacency. And instead, it's like, okay, it's just this profoundly good technology, this profoundly important network, and let's not mess it up. Let's put it to the best possible use, decouple it from casinos and just short time preference behavior, and focus on what really matters, which is payments and savings and things like that for 8 billion people in the world. Um, Outside of that, I think that the sharp things are probably done. But then again, I mean, before FTX blew up, I mentioned this on Yahoo that after I saw a number of people mention Luna, I dug into it, and I then grew concerned about it myself before it blew up. And I specifically wrote about how it could impact Bitcoin because they could be selling their Bitcoin into an already weak market, and so that's obviously a terrible combination. That's what played out. Um, this like latest shoe to drop of FTX Alameda blowing up as spectacular as it did was already kind of worse than my base case expected. And so I wouldn't be surprised if there's something else out there. I mean, Three Arrows Capital was not on anyone's radar really, and that was an example. So, for example, Celsius was a well-known problem. There are a bunch of these that were well-known problems, whereas there's one that you just don't see coming, like Three Arrows Capital or something. Bitcoin, now that all this leverage is blown out, now that investors are spooked out, now that a lot of the coins have shifted from weak hands to strong hands, it could potentially go sideways for a while. It could potentially grind a little higher, a little lower, big choppy trading range. While some of the malinvestments could still bleed out significantly, right? They could just keep grinding, lower highs, lower lows, lower highs, lower lows, as more and more capital kind of leaves some of those dead malinvestment things and either flows towards Bitcoin or gets out of the ecosystem. Sometimes things just bleed out over years, and I think there's a
Mhm.
lot more of that this still has to happen in the industry. When you look at a long duration treasury and you look at a short duration treasury, normally the long duration treasury has a higher yield because you're lending money for a longer period of time, and so it comes with a higher yield. You're locking up capital for a long period of time, although you can sell the security. But shortly before recessions, the market starts to anticipate that the short end is going to get cut at some point in the next few years, and therefore they end up being more willing to buy the long end of the curve, and it becomes kind of a self-fulfilling prophecy because then lending has trouble working when you have the long duration interest rates below short-term interest rates, because the whole lending model, the whole banking model is basically duration transformation. You buy you basically you get capital from the shorter end, the lower interest rate end, and you lend it out at longer time frames for higher yields, and you manage your liquidity profile. And a lot of people are worried about what would happen to, say, Bitcoin if you had a recession next year. And obviously, that's somewhat uncertain. We don't know for sure. But I think a lot of that's going to be driven by earnings going, say, flat to down, rather than just ongoing valuation contractions. Obviously, when the dollar is going straight up, the dollar index, and you're getting a higher rates and you're getting a valuation contraction, that hurts things like gold and Bitcoin too, even though they don't have profits. It's just kind of it's hurting their relative attractiveness compared to the dollar. But that if you encounter the next part of the cycle where you have less harsh monetary conditions, or at least the rate of change is less harsh, but then you have just ongoing weakness from equity earnings, corporate earnings, you can potentially get a decoupling where things like gold or Bitcoin do okay, maybe not great, while stocks are still, or at least some sectors are still doing very poorly. So I think people should not assume necessarily that if the stock market goes down, that Bitcoin has to go down. Kind of a similar thing happens where they assume that if the S&P 500 goes down, the emerging market index has to go down, which is not necessarily the case. I mean, and I think that's the signal through the noise. Some people are focused on offshore casinos, other people are focused on, having people in developed countries have better access to, savings, payments, anti-authoritarian tools, whatever the case may be, right? Actual utility. It makes me optimistic to see that kind of thing happen outside the United States, outside of the Western world. It's, people don't need, like, as much as I love to talk, people don't need to hear me say the same thing again. I wanted them to hear voices from countries all around the world, and people that are using the technology in an environment that's different than what people in the West are used to. Because I still see people on Twitter or elsewhere that are like, "Why? What does Bitcoin solve? It's a solution without a problem." And I would just cite Alex Gladstein's book, Check Your Financial Privilege, which is, yeah, sure, like, I don't need Bitcoin right now necessarily in the United States. I still think I do in the long term, but right now it's not like next month my life is changed by having or not having Bitcoin. Whereas in many countries in the world, specifically things like Bitcoin and stable coins add access to savings and payments that they don't otherwise have access to with their local currency, with their local banking system, and with all of this persistent currency devaluation and arbitrary bank freezes that they can encounter. It's African businesses that are rising up, and just plenty of amazing programmers and designers and, like, marketers, and just coming together and building these awesome businesses by Africans for Africans, to just have better payments and savings technology. I think they're really on point, and I'm really excited about the whole space and the whole area.